to go there.
Yeah, man. And I mean, hopefully blockchain can have a little bit of a part for that.
Yeah.
My only concern is, like with the security tokens, the segue in is a good example of that. They can. I've invested recently into. I'll be open. I invested in something called City Block Capital, which is
Oh, yeah.
basically
Yeah.
tokenized
I was just
fund.
checking that out.
It's I mean, I'm not going to push it on anyone, but I think it's really cool. I did an interview with the founder, the CEO, sorry, Rob, the other day, and like I think it's awesome. For a minimum of $5,000, I was able to basically get into an opportunity which in the past only very, very rich people have. My concern is the US. I don't get the stupid accreditor investor rule.
Yeah.
If I lived in I mean, I don't know about your financial situation. I'm not going to ask, but like if I lived in the US, I would absolutely be nowhere near being an accredited investor. And yet I've been studying this stuff nonstop. And yet some dude who's, I don't know, sells lots of cars and has got really rich from doing that is apparently a more sophisticated investor than me, and he has opportunities I don't. I find that absolute madness, especially as it's 3% of your population are accredited investors. So what I find tough is that I love security tokens because of the impact they're going to have on the world and helping regular people. But in the US, it's just going to make the rich richer and the poor are going to miss out, even though they see this opportunity, but they won't be able to get in. That I find quite challenging because I think it's one of the most just disgusting laws that there is in the whole world.
I have mixed feelings on it because I see it as sort of intrinsically linked to what securities law is in the US, because we have the strictest securities law in the world. And, yeah, that's definitely on display. And why that is almost to enforce this sort of golden standard, or Midas touch, if you will, where if you're investing in U.S. capital, you're investing in a U.S. company, that is there's an enforcement in place to protect the investor. Ultimately, the charter of the SEC is to protect the U.S. investor. And people give the SEC a lot of crap for like what they do and how they do it, but they're really just the policemen. They're really just enforcing the laws as written. If you want to point fingers, point them at the politicians who aren't getting with the times, if you will. But I think that brings up a really good point of sort of the impetus, sort of the what we saw with the ICO. And how that is, almost very counter to what accredited investor laws, what securities law, all this sort of represents. It was, a very, I don't know, there's a lot of disruption potential in there. And yes, it was a flawed model, but it showed that, that there's cracks starting to form in the overall capital formation process. That if the U.S. doesn't get with the times, it will be left behind. We will have capital and intelligence flight from the states, because it's all well and good to have a walled garden, but what we're increasingly seeing is a push towards a more globalized market, a more globalized society, and I think investor protections still need to be in place in some respects, but they also need to be updated to reflect the the state of things. So
I actually don't have a problem with the SEC generally. Like a lot of people talked about utility tokens aren't securities, and I always said to them, I'm sorry, that could be true in the future, but right now that's bollocks. Why did you invest into an ICO? It was to make money. Anyone that says it was for future utility is just trying out a line which we all know isn't true. We all knew it was for investing. I guess my issue is that I feel like there should be maybe an accredited investor role, but also the ability to go somewhere and take an exam. Like when I did my driving theory test, I had to go into a test center. Everything was regulated. They put questions in front of me on the screen. If I'm really passionate about security tokens, I may have, like, if I was in the US, I may have to leave. I may have to go to another country to be able to get in. I get the idea of the accredited investor rule is simple.
Mm-hmm.
So like you can just put a limit. But I think there should be a way for people who are under that to be able to prove themselves and say, look, I know all of this. I understand how capital markets work. I know what security tokens are. I understand this market so well. Don't tell me I can't invest, because that's just absolute bollocks.
Mm-hmm.
That's what I feel. There should be almost two tiers to it. It shouldn't just be money, yes, no money, no. I like that.
Yeah, it does. It does. I share your frustrations, because it does feel almost arbitrary sometimes. You know, especially as sort of wealth inequality becomes a more pressing issue, especially in the States. You know, I try to temper that with what we saw in 2017. With, you know, yes, I think there is a lot of power in the ability to go out and facilitate, you know, investment and to you know, attract investor capital in a free market situation. But at the same time, we there has to be some respect for you know, the fact that, you know, if you lower the barrier of entry so much, then unfortunately you do attract bad actors, and bad actors basically spoil the entire apple cart. So how do you weigh that is something very interesting, and I think that is the question that security tokens are very equipped to solve, because I mean, what we see right now with you know, sort of not the death of the IPO, but like the starting to move away from public offerings, and really there's a lot of reasons to you know, entertain private capital, because for one, you know, there's less disclosure requirements. It's also been proven that, you know, managers, directors in a private company are more effective at what they do, because
they're not just trying to maximize their share price.
Yeah, what is the quote that non-executive directors of public companies focus more on avoiding risk than creating value. And I think that's very true. I think that
absolutely,
when you have a gun to your head of, you know, like investors who are basically participating in the governance of what it is that, you know, the company is doing, you know, I hate what the CEO just said, I'm gonna, you know, tank the stock, you know, like that sort of stuff. It does put it is a sour note. I mean, yes, there's nothing like the public equity market for, you know, liquidity and the ability to fundraise capital, but at the same time, you have to temper that with just what that exposes you to in terms of image and you know, investors. And I don't know, with the ICO, I saw almost a bifurcation of the ownership of the company and sort of who owns the growth of the company. In the traditional equity model, you know, the shares of a company are really only currency and offer both governance and financial reward. But with ICOs, we saw sort of the separation of the two, you know, allowing the retail investor to gain access to future business growth without actually buying governance. And I think that's the key to why both ICOs and STOs have purpose in this sort of new digital economy that we're seeing sort of come about, is that there's I do think there's a need for both, but they sort of are still nebulous in the roles, and we'll definitely see the opportunity to better define that as this space becomes more established and more mature, and really as people start to question what it is, you know, the merits and really the restrictions and, you know, the model of the traditional finance.
No, dude, it's 100% true, and this is why I feel like security tokens have almost come along at the best time possible. Because as you say, there is this transition away from public markets to the private markets. Companies that don't want to go public because why would you? I mean, it's the incentives aren't well aligned.
Yeah.
You don't get a lot from it. My concern is that well, actually, no, this is why it's perfect timing. It's because for the first time ever, regular people can get into the private markets. As we're seeing this transition away, like a lot of people I speak to, I notice if I'd speak to people who understand money very well, they basically understand that the best possible thing you can do with your money is to save up when you're early, put it into investments and let it compound over many, many years.
Yeah.
But the problem is, if you have to be of a certain level to be able to get into those private opportunities, and everything in the world is moving towards private opportunities, the little guy gets screwed, which is why I'm so excited about security tokens. And they just come along at the perfect time, the point where they're going to take all these opportunities that existed in the past, the best ones, and give it to the little guy. But on top of that, we're seeing this transition where more and more opportunities are going towards this private sector. And we can finally open that up, democratize it, and give people, like, I mean, that sounds like a guess-free financial situation, but me at least, the opportunity to get into the opportunities that I see out there, but have always just been like, oh, come on, I don't want to just put money in an ISA and just buy an index fund. That's cool, but I want to also get into a little bit of venture capital, and I want to maybe buy a small amount of real estate. I want a diversified portfolio. And for the first time ever, I'm going to be able to actually build that. And that's why I just, beyond levels of excitement I can even put into words, that we're here discussing right now, some of the earliest people discussing that this business model is being created in front of us. That is just so cool.
Yeah. There's 3 points I want to make sure I addressed with that. The first is, yes, you're absolutely right. The conventions of traditional finance and retirement, and just how you save has completely gone out the window, I think. We still haven't seen the pension market basically recover since 2008. The liabilities and assets are still like way out there, and I don't think anyone at this point is counting on a pension. Is counting on Social Security in the States to protect them in retirement and allow them to facilitate their financial goals and financial freedom. So there was a shift in the States towards what is known as a 401k and IRA, and these are basically retirement accounts that invest in stocks and bonds. But what we found with the 2008 financial crisis is that even that is not there's it's sacrilege almost, but even that doesn't constitute a well-defined retirement strategy. And certainly managed assets, just there's something lacking there. So I think where we're pushing people is towards being more savvy with their own retirement and financials, and giving them the ability to really join the investor class. That, I think, was one of the major things we saw with the ICO advent, was sort of the democratization of the investor class. For someone to have the ability to invest $10 in an ICO is something that just doesn't meet the conventions of the traditional investment financial world.
Absolutely.
For people to engender risk on their own, I think is both terrifying, but also extremely powerful. It's the same thing we see with blockchain. People are becoming their own bank, and what does that represent? So that I think there's so much power to that, and so but again, it was flawed. It was a flawed model because I like to compare it to, are you aware of what Napster is?
Yeah. The music peer-to-peer downloading that got sued.
Right.
Heaven. Yeah, but a cool business model.
But the thing is, it introduced this sort of, almost, it democratized music sharing.
Peer-to-peer model.
Being able to access the entire internet, the entire catalog library of music in one interface, instead of going out and buying CDs and buying individual tracks, and sort of the iTunes model. And it showed 20 years before it really became popular that there was a better way. And so it took some time to move towards a Spotify or an Apple Music. But this is the same sort of thing that we're seeing with capital formation, with individual investors, retail investors, having the ability to, if they want to, invest $10 in something, to be participatory in what they define as their financial freedom and their investing strategies. And I think that's just spectacular. I think that is, there's so much power to that, both on the investor side, but also on and this is again a really good way to prop up STOs, is that as an issuing company. We saw that there was, for the, like the average ICO, not to raise 250 million, but the fact that they could potentially, whereas the average IPO is what, like 100 million, that's incredible. And yes, again, it was a flawed model, but for you, as if you have an idea for a company, if you want to build a business, for you to say, I've got this dream, I want to build something, help me make it happen, instead of having to go to a bank or some VC or just trying to entertain private capital that way, for you to basically democratize the capital formation process, go directly to investors and say, help me make this happen, let's build something together. I don't think there's anything more powerful than that. That is a complete paradigm shift of how things happen in today's markets and just how we do private equity. So I think, and that was the last point I wanted to address. I think there's such almost a miscategorization or a misinterpreting or misinformation, really, misunderstanding. That's probably what I was going for, of what STOs represent. They're not going to be the tools of the rich to get richer. There's going to be some aspect of that, sure. They're not, ICO 2.0. Hey, we just rebranded. It's all, like we're still here to scam you out of your money. That sort of thing. BitConnect 2.0, like that sort of thing.
Yeah.
No, it is a complete paradigm shift on the concept of private equity, and that I think goes completely lost on most people. I just watched a video that Altcoin Buzz put out regarding some like Singapore blockchain week or something like that, and they interviewed a bunch of like big names in the industry, and when asked about security tokens, it was the same sort of rhetoric that I keep seeing repeated over and over again, like, oh, it's okay, it's going to be like just this thing, and I'm distrustful that it will ever take off, or oh, it's just trying to be ICOs all over again, or this sort of stuff. And I think that's completely disingenuous to what it is like actually representing. I don't think that STOs are really a part of crypto. They utilize blockchain technology, but I think they stand alone almost.
Yeah. Absolutely. I mean, they derive their value from underlying assets, which for the majority of them have nothing to do with crypto whatsoever. Yep. You could have a blockchain related company, have an STO, but people will actually, I find the exact same thing. So people think that, let's say a regular company that has nothing to do with blockchain raises money via an STO. And then we've got that one company over here. And over here, we've got a company which is working in the blockchain sector, but hasn't gone through an STO. The one that has raised money via the blockchain has nothing to do with crypto. They might be a bunch of restaurants for all we care. They just use the fundraising model. So they're not blockchain related. But the company who are literally working in the blockchain sector, just because they haven't had an STO or an ICO, people think of them as private and therefore unrelated. They actually think of this one as more unrelated to crypto than this one over here, which is the chain of restaurants. I'm like, no. Blockchain ICOs basically introduced a lot of shit. Like, there's no denying there was a ton of shit there.
Yeah.
But what they showed is the fundraising model, as you say, is excellent. The ability to raise capital from worldwide is amazing. And you can apply that to any industry. It doesn't have to be blockchain, doesn't have to be crypto.
Right.
For people seeing...
That's exactly right. That, is like 5 years away from any sort of utilization. And, like, let's just talk about the worst case scenario here. Even then, to like dismiss it as like that up front and to judge it as that, I think is so disingenuous to, what this the overall crypto community represents, what blockchain stands for, basically. So
yes.
Yeah, it is disappointing, but I think you're right. I think there is a miscategorization of what STOs are and who represents them. Because I don't know about you, but my takeaway from the London Security Token conference was exactly what you said, that there is a lot of institutional players. But at the same time, I saw them as cognizant, almost scared of what is coming down the road, because they understand that their, traditional fund management, traditional finance, it's not just security tokens, but they represent, a larger, a spoke in the wheel of a paradigm shift that is coming. It's precisely when you get comfortable and you try to, say like, oh yeah, things are, we're established, or, I don't know, like, we're at the top of the world, basically. It's precisely at that moment that you get, knocked off the horse, or, that's when you get disrupted, basically, is when you're at your most comfortable.
When you're too comfortable, when you think you can't be disrupted.
Exactly.
That's when the little players come along.
Exactly.
And there's, related to the institutions, there's one kind of real key thing that I want to get across to everyone. Like, I'm constantly saying it to everyone I meet in person, which is that a lot of people think security tokens are essentially taking blockchain and just doing the old system. And the whole point of Bitcoin was the cypherpunk movement, and was to move away from the traditional system. And it was like, at its core, there was so many ideas related in there, but at its core, it was screw the man, basically. It was screw the big guy, let's give the little guy something. And a lot of people have this opinion that because we're moving towards institutions related to blockchain, then that's against the ethos of blockchain in the first place. And I'm always trying to tell them that if the whole core premise was, and it is simplifying it obviously, but screw the big guy and give the little guy something, that's exactly what's happening with security tokens. Yeah. We're taking private capital markets, which is where you could make the most wealth ever. Like, that's what any smart person should be doing. They should be investing into markets, but they can't get into the best market because only the big guy can. And now we're going to have an opportunity for the little guy to get into private capital markets. The power of that is so big. And to me, at least, it is actually the core ethos of blockchain. It's not fighting against it. It represents, not exactly the same, but in the same principle, pretty much identically to how this movement started in the first place.
Yeah. I mean, honestly, I look at it from that perspective, but I also kind of look at it from the other perspective of, when you have almost this anarcho-capitalist, movement that is blockchain. And yes, we saw that as a representation of, the ICO movement, giving everybody the ability to get on board. And that was great. But at the same time, we need to recognize and admit to ourselves and really, sometimes we get in our own echo chambers of like, oh yeah, like we'll just get back to a bull run and then everything will be all right. But no, there was a lot of pain and suffering that came out of the ICO market because there were no safeguards in place, basically. I think we have to recognize that, and we, as much as we want to, tear down the existing system and shake our fists and disgust at the system, the man, at the same time, we have to recognize that we did no better in the ICO market, and our representation of what we felt was at the time, the proper way of going forward. There was a lot of people that got burned through ICOs, and yes, I don't want that to overshadow the potential of what it represents, but at the same time, we need to be cognizant of the fact that sometimes, these regulations, sometimes these safeguards are necessary, because, I mean, when you have a completely anarchist type solution, it does lead to chaos. And so it's a balancing of this sort of order and chaos that we're seeing. But yeah, I think one of the easiest ways to demonstrate what it is an STO represents versus an ICO, at least as it relates to the individual retail investor, is that an STO doesn't have scams. That's pretty much like the easiest way to look at it.
I think there will still be some scams out there. I think it's
There's
very unlikely there won't be.
the,
But
yeah,
when you have to go through the proper regulatory methods and you have to file for certain exemptions, you're not going to want to put your name on those documents if you're carrying out a complete scam.
Yeah.
Like, people should still be aware that there will always be phishing websites. It will always
Yeah.
fish on Telegram. All of the Twitter not giving away ether, those kind of bots.
Yeah.
I don't know whether Twitter started clearing them up or whether
right.
they just lost interest in ether, but they're going to come back. There's going to be a lot of scams, but it's providing a regulatory framework certainly alleviates many of the bullshit claims as well as the scams as well. Projects saying we raised 10 million because they want to provide that FOMO to people, and it turns out they haven't even raised $1 million, and they have got a countdown timer saying this bonus ends in this period of time, and then you feel rushed into buying it.
Yes.
A lot of that just terrible nonsense that was going on in the market will hopefully disappear, because in my eyes, STOs are kind of like, you could view them as they're the combination of blockchain and the traditional financial markets.
Exactly.
So I like to describe them in two ways, in that it's either, you could describe them potentially as the professionalization of ICOs. ICOs were a fantastic method of raising money, but at the end of the day, a lot of what was sold was shit. I mean, it went up in value. So that doesn't mean that the underlying utility tokens, 99%, and there is 1% out there that were very good and actually have genuine use cases.
Sure.
But in my opinion, 99% shouldn't really have any significant value. The problem was people were buying them because they liked the idea of a project, and they thought that that's how you get into the project.
Yeah.
They didn't view it as this project has equity, that's over here, and then they're selling. Essentially, like, you could sell a digital course. You're just selling something online. That's all these tokens were. It doesn't mean that they have inherent value. But people couldn't invest into the equity. They saw tokens and they thought, yeah, now I'm into the project. STOs are taking that and they're saying, now we're actually going to give you equity. So if you like this project, you think this company is going to do well, the value of your investment is now tied to the actual success of the company.
Yeah.
And that's a huge, huge step. And the other way of looking at it is essentially just taking the old markets, the old stock markets, financial markets, and just applying a blockchain. Because at its fundamental core, a blockchain is a fantastic tool for trading and accounting. And stock markets aren't very good for those. You have to do a lot of manual processes. You have to do audits. The regulation isn't baked into the code. So you have to go out and manually check that everything's working. The blockchain just simplifies and automates so many of those processes. And when you combine the power of those two, professionalization of ICOs and traditional markets moving on to blockchains, the total market size is just phenomenal.
Yeah, I'm of the opinion that at least in the initial phases, that we won't see STOs, really blockchain, intersect with the public equity markets. It's really, I mean, they're already trading, millions of shares a second. Sure, there's maybe some administrative overhead that can be simplified or automated through a blockchain, but there's really not much there. The opportunity.
What about long term? Do you think that?
Sure. Especially as it relates to trade settlement in the States. I think it's what it's referred to as T+3, or sometimes it's T+2.
Yeah.
Sometimes
crazy settlement time. Yeah.
They've even gotten it down to T+1 in some cases, but that's trade plus settlement. Yeah. And that's just based on what the system is. You're basically waiting for the funds to settle. And that's, actually the impetus behind T0 is that, their whole motto is that the trade is the settlement.
Like that.
Yeah. But, it's also, you've got, what is it? Seed & Co. is technically the owner of every share. And it's really just a transaction settlement ledger that ends with seed. So, like, I don't know. I think there's a lot that people misunderstand about what the public equities markets represent. But
I actually think, sorry,
no,
go ahead, jump in.
well,
I actually think long term, every government is going to mandate that every share is a security token. And that sounds crazy. Everyone thinks blockchain is totally anti-government and it's the opposite. The truth is it comes to baking regulation into code.
mhm,
The ability to write into the code that you can only send this share to these KYC'd, AML'd addresses.
mhm,
And you can't do it out of these times. And you can write in any piece of information that you want. And that saves the government so much time and effort rather than having to do a manual process and going through and making sure that all the shares are in the right place. And we've seen some famous examples where that hasn't occurred correctly.
yeah,
You just automatically bake it in. And also auditing. Like, you won't have to carry out manual audits because you'll have the regulation baked into the code and you'll be able to track everything on a blockchain incredibly easily. So I am of the opinion that it's going to take a long time, don't get me wrong. But in the long term, I think every share on every share of every company will eventually be traded on a blockchain because governments will force it and because it's simply a better system. In the same way that if you went back 20 years and you said to someone, paper shares won't exist in 20 years,
yeah,
they'd be like, what? You're going to do this digital thing? That's madness. But now if you say to someone, this company has paper shares, you'd say, what are they doing?
mhm,
Why are they doing paper shares? That's so weird. I think the same transition is going to happen with security tokens. And when the word security tokens is going to disappear over time. They actually, someone at the security token conference said, I think is a great quote, which was that once it was paper shares and then someone started calling it electronic shares. And after a while, every share is electronic and we're just back to the word shares. I think the way security tokens are called security tokens now will be at the point might take 10, 15, 20 years, but every company will just have security tokens and that will be a phrase from the past. Maybe it will be called digital shares or something like that, but we won't be using this term because it will just be ubiquitous.
yeah.
Every company will have it.
Yeah, what is it? It's a regulator's response or forced technology adoption is basically a response to technology that sidesteps current regulations, that enhances the data accuracy and creates a more efficient and compliant system. And yeah, I think security tokens check all of those boxes. As I talked about earlier, when you have a paradigm shift that is technology, what it ultimately represents is faster, cheaper, more secure. That's, in a nutshell, what security tokens are, especially as it relates to the private equity market. Because, and this is where I think there's a lot of misunderstanding, or just people don't even know that, yes, in the public equity markets, you have digital shares and things are, even T+1 settlement is pretty fast comparatively. When it relates to like a global market, like that's all well and good, but with the private equity market, everything is still very analog. Obviously because there's just not a lot of
very little trading that occurs.
Yeah.
So when there's not a lot of trading, there's not much of a demand to shift towards a digital system.
Absolutely.
So that could change as private markets gain liquidity by being able to list on security token exchanges. You'll then have the driving forces pushing towards more of moving away from an opaque system and having to force fast settlement times.
Yeah.
Because if you're trading regularly, you can't have slow settlement times. It doesn't work.
Yeah. Well, I mean, that is the way that it works now, because when you have a buyer-seller transaction currently in a private equity situation, you have to ensure compliance of saying, yes, buyer can sell to seller. And how that's facilitated is through a fund manager or someone who manually checks, maybe a lawyer or so, but they manually check that, like, oh, yeah, okay, this guy is accredited, that guy is accredited, they both are, from this jurisdiction. Like, this transaction can happen. And of course, coming from blockchain and that industry, we know that anytime there's a middleman in between a transaction, there's an opportunity for disruption and blockchain settlement. So exactly what you've been saying, you bake the compliance into the token that represents that transfer of value, or equity in this case. And that's like that in a nutshell is what security tokens represent. And to have that on something like an exchange basically creates a secondary market of, yes, whitelisted individuals, but you have now the potential for a global equity marketplace, a secondary market for private equity. The fact that there's a global liquidity pool for something, I don't know, for example, like a REIT in Arizona that represents a bundle of houses, that just doesn't happen these days. And furthermore, then you get all the benefits of tokenization. So you get the ability of fractionalized ownership, the potential to own like $10 of a building, for example. You also have the ability to build in something like synthetic derivatives on top of that. So you could bundle a bunch of assets together, say like, you could go short on Midtown Manhattan and long on Hell's Kitchen. And like, that just like, that blows my mind. That doesn't exist now. So,
No, that's exactly what it is. And it's looking at the fundamentals and just seeing if they make this much sense. As I said earlier, every step in the way, every hurdle will eventually be overcome when you can redesign a market in a way which is so much better.
Yeah.
Not like a small iteration with a tiny development, which is slightly better. When you could potentially redesign them to the point where they just function 10 times better than the previous system.
It's all about efficiency.
It's a matter of time.
Yeah.
That's all it is.
Yeah.
And I actually see, this is an interesting one, actually. I'll pose this question to you. So actually, I'll explain kind of where I'm going with it, because I can't think of a way of proposing it as a question very well. I talk to a lot of people and they think security tokens are miles away, but utility tokens are now. Like they're already in the market. They make sense. And I have the opinion, I'm always trying to explain to people that for utility tokens, many of them at least, as I say, they're not all the same, but the majority of them rely on building entirely new crypto economic models, which are highly hypothetical. Yeah. We don't have users on decentralized applications yet, certainly not more than a few thousand. Whereas security tokens are essentially just taking the old system which worked, and that's if you're looking at the traditional financial markets, or even looking at ICOs, taking the fundraising model, which already worked. It's taking stuff which we already know works and just applying it to the regulations which already exist for securities. So in my eyes, security tokens are actually far less hypothetical than utility tokens. We know this stuff has value. We're just trading it in a better way. We're just storing and accounting for it in a better way. It makes so much sense. Utility tokens rely on crazy theoreticals which we haven't seen play out yet. So I'm always telling people, for me, just because security tokens came in their minds after utility tokens, their actual value and their mainstream adoption is going to come far before utility tokens. The order is in reverse.
Yeah.
What do you?
Well, I think there's room for both, and I think it's necessary to have both. And furthermore, I think when ICOs were the hot thing, and I did a lot of fundamental analysis on projects and read a lot of white papers and basically determine whether or not something was worthwhile investing in. The first question I would always ask is, what is the token for? If they don't have an answer for that, then I can't see this as a utility token that has utility. But I think security tokens are actually almost represent the natural way to solve that. So if you do have a utility token that is meant to be used on a network, for example, to basically split out and have security tokens over here doing the fundraising, so that the utility tokens aren't responsible for that anymore, then they can function as what they're supposed to do, be that an arcade token, be that interacting and paying developers. I don't know, like there's many different ways to use utility tokens, but I think you're actually you're absolutely right in regards to where utility tokens are right now. They're just trying to do too much, and that's why it we had sort of this almost cognitive dissonance that, yes, like I see the potential here. There's something here that has value. We can see something like Ethereum being like, yeah, wow, that is really powerful to have this platform and have ETH being used, and I don't know. There's a lot of cool stuff with that, but at the same time, you get sort of this issue of like for example, ICO projects selling all their ETH to fundraise their platform, crashing the price of ETH, and like it doesn't work as an economic model simply by itself. I mean, maybe in the form of platforms. I don't know. Like we're still
I
playing
think
around.
you said it absolutely perfectly,
Yeah,
which is that security tokens are the method of fundraising. Utility
yeah,
tokens have utility,
yeah.
but if you're looking from the investing perspective,
Hmm.
I don't think utility tokens should really increase in value that significantly, because
Yeah.
uh, even at all. Because for the reasons you just gave, that you said utility tokens can be used to pay developers, they can be used on the platform, etc. If that's the use case of your utility token, do you want something which is increasing 20 times or decreasing 20 times in the course of a couple of months?
Yeah.
Or do you want something which is relatively stable?
Yeah.
I think you actually want something which is relatively stable,
Mhm.
which is why the business models are mostly going to be that security tokens is where the value accrues, and utility tokens are a payment mechanism within the platform or the ecosystem, and that payment mechanism is best when it's somewhat stable.
Hmm.
So the idea of investing into a utility token over a security token, I I know that's kind of where a lot of the market participants are still at the moment.
Mhm.
They're still at the idea of utility tokens might be the better investment. I think we're going to look back at this in however long it takes and just say that was mental. Security tokens were so much better if we're looking purely from the investing perspective.
Yeah, I still think there is, I don't, where I see us right now and where I see the advent of the STO is that I see it as the death of the ICO. I don't
Mhm.
think the ICO was ever a sustainable model, because yeah, you're basically pitching a white paper and a dream, and you weren't selling equity, and yeah, there is, I do think there is some value in allowing investors to gain access to future business growth without directly buying governance, but at the same time that opened them up to, like as I was saying earlier, like there's going to be scams, and really what it came down to, and really what SCOs represent, is that they have built-in investor protections in place. That's
Mhm.
you won't exactly be able to directly invest in scams, but you will definitely be able to still invest in bad investments. That's never going away. But
Yeah.
yeah, to be able to allow people to have those investor protections in place, but also be able to utilize the network in the way that it was designed to be done. I think, yeah, I think you're exactly right. And I think that is the future of where we're going. And yes, it will take time. Yes, there will be probably years before we see this sort of dual token, I don't know, ecosystem come
Mhm.
to fruition, if that is where we're going. There will always be companies that only want to use utility tokens. There will be companies that strictly want SDOs. There will be companies that use both. That's all
Mhm.
cool. I think that this is sort of the financial engineering, sort of rethinking how we do economics, and sort of this decentralized economy, and really the future of how, I mean, seriously, we're on the precipice of like a global economy, and what does that look like, and how do we interact with each other, and sort of just ease the friction of being able to do cross border investing and remittance and all these other things. Like I see them all intrinsically linked, and it's really exciting to see that, because ultimately it gives us more power.
Mhm.
It gives individual people more agency, a facility to take charge of their finances and join the investor class, even if
Mhm.
they don't have a lot to set aside. Strictly speaking, as a U.S. millennial, we've sort of been, my generation is saddled up with student debt, and it can't even buy a house right now, and
Mhm.
what is it, like 46% of U.S. adults can't even If they had a $400 emergency, couldn't even meet that. People don't have a lot to set aside, and increasingly saving for retirement is a challenge and almost a pipe dream. But I think a lot of people could set aside little amounts to put out there, and for them to have sort of ownership of even $10 worth of something. I think is like, that's a special idea, and that I think that needs to be championed. So I don't know. I see all of this sort of like,
I completely agree. And I want to kind of clarify. I think I maybe went not too far, but not clarified exactly what I said, what I meant, which is that with utility tokens, there are definitely some out there which have real inherent value.
Yeah.
So there are some, I'm not personally invested into Binance Coin, so I'm not trying to punt anyway whatsoever, but I see the real value there.
Yeah.
Because if you want to use their platform, which is live right now, you can buy something and then you get cheaper discounts. So you get a clear monetary value.
Sure.
So there are a lot of good utility tokens. I don't just want to disparage every single one, and people watching this just have a negative reaction. But I kind of want to also maybe educate people in that I think a lot of what people bought during the ICOs, it was shit, and it's difficult. It's really difficult. Like when you have that tribalistic feeling, to give up on the idea that what you bought was shit. And I try telling people, and I get a lot of backlash because sometimes I try telling people the harsh truths, which they don't often want to hear. The only reason I say it is because I genuinely believe that, I believe this market is going to return. It's going to come back in a very strong way. But if you look back to the previous bubble, a lot of the top projects back then are no longer the top projects now. They're not even still around. So the idea that every single project is going to raise in value just because the market turns around, I think is fundamentally flawed.
Yeah.
And I'm genuinely concerned for people out there who are holding utility tokens, which they're convinced are going to return because everything's correlated and the market will come back. But they're going to miss out on the opportunities which are here, even though they're so nearly right. Like they're in the market, they're holding these things which are close to being part of something huge. It would be really sad, I think, if those people got that close to something big but didn't quite understand at the time that what they were holding doesn't necessarily have inherent value.
Yeah.
And that's why security tokens, I'm really passionate about them, because there's going to be some shit ones as well. There's not everything's going to be good. Like 90% of startups fail. Just because you invest in something, it doesn't have to be a scam for it to go to zero. It could well go to zero, but at least you have a share in a company. You know, if that company does well, your investment will increase in value. If you hold a utility token, you don't actually know that that's the case.
Yeah.
The company could do well, and yet your token may go down 90% in value. You were that close to getting it right. But those people, as you say, like a lot of people who got into this market didn't necessarily have a lot of money. It was a retail-driven market. I know that I'm not anywhere near an accredited investor. I don't want to be throwing money away. I invested too heavily myself, and I feel passionate about security tokens democratizing capital markets, which have been unavailable to regular people, and also quite passionate that I don't want people getting burned when a lot of things return, but a lot of things also don't, just because they've attached their emotions to something which should be purely emotionless. Investing shouldn't be emotional.
Yeah.
And I'm always trying to get that message across. And as I say, I get a lot of backlash for it, but I'm going to keep telling people.
Not for me. Yeah, I think we as a community, and certainly you and I who have voices in the community, need to acknowledge and respect and sort of make sure that there's I don't know. The last year I think has been really hard for a lot of people because there's been not only like a disillusionment, but also I'm sure there's a feeling of like, well, I wanted to believe that this was tangible, that this was real, that I was participating in the future, and all I'm getting is like this notion of like, oh yeah, bull market's gonna come back, and institutional money and Bitcoin ETF and backed and all this stuff, and it's yeah, I think it's all crap because you basically are petitioning people's hopes and dreams on this sort of like, oh, you could almost get it, here it is.
Yeah.
And yeah, to temper that with this almost tribalistic mentality of like, yeah, you either have to believe in it or who are you, kind of thing. Yeah, I think the crypto community needs to do a lot of soul searching in that regard, but I think that's also our opportunity. I think we have gone through what I think the larger global economy is going to be going through pretty soon here.
Already started.
Well,
Got a long way to go.
Yeah.
But it's, I mean, the last 6 months, regular financial markets, the majority of them worldwide, have been pretty painful. And that's why I think this is the best opportunity. I don't know, I think it comes across in like it's opposing forces in the sense that when everything is great, everyone thinks, let's get in. And when everything is terrible, everyone thinks, let's get out. But the truth is the exact opposite. The same way that we saw everything went up in value, regardless of what its purpose was, whether it even had a working business. It just was a white paper. And it still just went up in value because we're in a bubble and everything got overpriced. Everything got overpriced. Now, because we're in the point of maximum pessimism, and hey, we might go lower, I don't know, but we're certainly near maximum pessimism. When I speak to a lot of people, particularly out on the street, they're like, no, I wouldn't go near that market. I wouldn't touch it with a barge pole. When they say things like that, it means that there are still probably 95 to 99% of projects that don't necessarily deserve to have a good token value because either the project isn't good or there's no real use case for the token. But every single good project has now been pulled down with those. And we see some incredible opportunities out there because everything is now undervalued. Sorry, not everything. The good things that come from the bad times are incredibly undervalued. The same way that Amazon crashed 95% in the dot-com bubble, but it didn't mean Amazon was bad. It just meant that opportunity people saw then was now 1/20th of the price, and the opportunity existed so much more. That's what I feel like I don't know if we're at the bottom. I literally don't even bother looking at prices most days anymore, but I just feel like I see a lot of opportunities in the market, which I didn't necessarily see a while ago.
I want to try to placate people's feelings and emotions on this stuff, but I think I'm at the point now where I can't do that anymore, and I have to be frank and honest with people in the sense that I think it's going to be years before we see any sort of quote unquote resurgence or return to the norm. But let's again think about like, what does that actually represent? If we were to go back up to 20K right now, why would we do so? What would be the catalyst for doing so? Is that something that we want? Is really the question I have to ask. Because
can I ask you then? What do you think? If you look back at most bubbles in this market in history, they have been caused by some sort of catalyst. What do you think is going to cause it?
Well, I think at this point, just the way that I try to look at the global economy, and I like to be of the opinion that crypto has everything to gain and that the traditional system has everything to lose. But I think it goes deeper than that. Like I was saying earlier, that blockchain is part of something bigger. It's not just it's not just about BTC going to $1 million a coin or something like that.
No. There's so much development and everything that's going on.
Yeah, I think we have to constantly challenge ourselves to look at the larger picture here and understand why again, like why are we trying to push this? Like what is the purpose of this space? Oh yes, we want to decentralize money. We want to go against the establishment and, you know, create a new digital economy. But what again, what does that look like? Who is that empowering? You know, ultimately, I hope, it's my hope that you know, that we're giving freedom and agency to people that traditionally haven't you know, had it. And I think over the next 100 years, we're going to see a, you know, a real interesting shift in our society, because we're quickly going to, you know, hit about 10 billion people, and then we're going to kind of level off, and then we're going to see like Africa is going to be the next continent that, you know, that's where a majority of the people on this planet live. And it's just like stuff like that, I think is not accounted for in the levels of discourse that we have today. You know, we're just like looking 1 year ahead, and I don't know, I'm trying to see things for where they're going, and I can't accurately predict anything, and I don't want to. But, you know, I guess to answer your question, I think the next time that we see, you know, Bitcoin and cryptocurrency start to turn around, because I do believe that that's inevitable. You know, I don't want to be of the opinion that, you know, it's going to be 3K forever and that's it. No, it's a deflationary asset that doesn't make any sense anyways. No, I think what will be the impetus, the catalyst, if you will, of the, you know, crypto coming back, I think is tapping into that, tapping into sort of this power, you know, struggle or shifting of power structures within the economy, the global economy rather, and just again, like trying to somehow give that to the maximal amount of people, because, you know, I look at statistics like 2 billion people don't have access to bank accounts, that, you know, they're underbanked, if you will. I see that as a failing of the traditional finance system. You know, I see a large amount of people are going to be entering the economy and, you know, coming up as middle class citizens, and what can we do for them, and how do we reach them, and how do we do it more efficiently than what the traditional finance system has represented. So I almost see it as this is the critical era, where, you know, like, for example, what the internet did between, you know, 1995 and 2005 was it became sort of transient and ubiquitous, and in ways that it became almost, you know, like insatiable, like people needed to have it in their lives at that point. You know, we found that the internet's killer app, if you will, was smartphones, and you know, having computers everywhere, and every interface of our life is dependent on the internet in some capacity. And, you know, I want to be a believer that blockchain represents a similar, if not greater, potential. What that looks like, I still have yet to figure out. But I think the things that we talk about are all intrinsically linked to that. I think it's going to be the lifeblood of the new global economy, in ways that we can't even really foresee.
I agree with you. I agree with everything you say, but I actually think there's going to be one step, probably one step before that. I think that I agree with every statement about how providing people with access to basically have a bank that only have smartphones and have internet connection but don't have a bank account. Blockchain is going to transform that. It's going to change a lot of the way that the world works in factors such as that. But if we're talking, and I'll be very direct here, I think if we look back to the previous bubble, it wasn't really that related to Bitcoin. I know Bitcoin was going up in value, but the truth is, what sparked it was ICOs. People were making tons of money off ICOs, and the market is all heavily correlated. So Bitcoin shot up in value, and Bitcoin was on the news. But take away ICOs, I don't think Bitcoin would have shot up in value. So I'm looking at this next stage, and I'm not necessarily looking at Bitcoin to what's going to cause Bitcoin to increase in value, because the two aren't always linked. And that's why, topic of our conversation, I think is going to be security tokens. I think potentially further away than some people think, but closer than others. bearing in mind, if you went back 1 year, you didn't really have, I think maybe 1 year ago, we did have some security tokens out there, but it hadn't really been a proven fundraising model. Last year, $380 million was raised via STOs. And that's not a huge amount of money, but in terms of proof of concept, it's done. Like, we know the concept works because nearly, over a third of a billion was raised via that method. It's there. And then after that, people were looking at liquidity, because at the end of the day, you can have a security token, but if you don't have liquidity in the market, there's no point. Like, that's one of the key benefits, is liquidity in a market which had no liquidity before, the private markets. So you have to then look at exchanges, and exchanges have not really been online. We now have T0, they've come online, Open Finance Network, Shares Post, which was the biggest exchange of pre-IPO companies to investors worldwide. They're moving into security tokens. They're seeing this opportunity. And we have a lot of the barriers over the last year have been slowly knocked through. And once we get liquidity in the market, because liquidity doesn't come from exchanges. Liquidity comes from supply and demand. We've got the supply. Right now, though, there's no real demand. But there's nothing technological or physical stopping this from taking off. What we have is just a process of bringing liquidity into the market, which is mostly about education. It's telling people this is huge. Then when people start to click, they start to realize how big this is. They now want to get into this market. And now we have liquidity. Once we have liquidity, we have the potential for prices to go up and down. And in my opinion, in the previous bubble, I think there were some very educated people that understood exactly what was going on. The majority of people didn't really fully grasp what blockchain is, what Bitcoin is, how it works, what an ICO is, what they were even buying. They simply saw the model of put in £1 and £3 pops out, and it happens fast. That's all a bubble is. It's just a money-making machine. And that's why it eventually pops, and you have the horrendous aftermath that I'm currently going through. So once we have liquidity with security tokens, which comes from demand, we then have the potential for £1 to equal £3, and suddenly a few people start hearing about it. Then more people start hearing about it, and more and more and more and more. And even though security tokens have nothing to do with Bitcoin, they're totally unrelated. It's like saying Facebook and Netflix are the same because they both use the internet. Security tokens and Bitcoin aren't the same just because they both use blockchain. But because it's a bubble, people don't understand the fundamentals of that. So they start buying Bitcoin as well, because now we have the resurgence of blockchain, and everything, or the majority of things at least, will start to increase in value. And now it's back on the news. And now we suddenly have this crazy bubble reappearing, and the people that previously bought into ICOs don't think necessarily that they made a mistake. I speak to people and they think the biggest flaw they think they made was they didn't get in early enough. They say, if I got in April time and I sold out in December, I would have been so rich. All of those people, when they hear about security tokens, and also the education of how much better they are, how they have all of these voting rights, shareholder rights, they have the rights to final distribution if the company is wound up, so it won't even necessarily go to zero. So many more things. Those people are going to think, damn, this is my second opportunity. I held Bitcoin to the bottom. I got in ICOs at a late date. And now I think they're going to rush into security tokens, and we're going to have this bubble form again. I think it's going to be a slow build. If you look at the last bubble, it went crazy. But also, if you track it back the previous couple of years, it was a slow build to begin with. So I think we're going to have a slow build as liquidity builds in this. And then at some point, some trigger's going to come and it's going to get a bit of coverage, and we're suddenly going to have an explosive bubble. And a lot of people I speak to say, no, we can't have a bubble. These are securities. They're not utility tokens. And I always say to them, what? You realize that in history, just about every single bubble, with maybe the exception of Dutch tulips and utility tokens, was securities. Just because something is a security people say, no, it has a fundamental value. So we're obviously not going to have a bubble. Look at pets.com. Pets.com was valued at a crazy valuation, despite the fact they made no money.
Mm-hmm.
They had no revenue whatsoever. They just spent money on marketing. In a bubble, logic goes out the window. And that's why I think we're going to see a crazy bubble form again in the future around security tokens, security token offerings, and therefore, even though it doesn't make sense, Bitcoin as a result as well. And then all the things you say, I completely agree with them. I just think that
It's more long term.
I think this could come first, and then probably the bubble pops again. And if we look 20 years from now, the impact of a lot of this globally is exactly what you're saying. When I shorten my time horizon to, I don't know, maybe 3 years, that's how I can potentially see this coming in the short term.
I mean, let's look at exactly why the SEC rejected the Bitcoin ETF applications. Not that I'm counting on that doing anything to the market, because it's already done enough damage and I don't care about it anymore. But I think they had relevant points that needed to be addressed: market manipulation and market infrastructure. So what does security tokens and security token exchanges and security token issuance platforms bring to the table? It brings structure, it brings regulation and compliance, and the sort of trading and environment that regulators like the SEC are looking for. And so if you correlate that with just sort of a pullback of the utility token fundraising model, the ICO, you start to push that towards STOs as you know, the capital formation vehicle, and you use that as exposure to say, hey, you know, I'm a company, I want to fundraise. Oh, I can do it so much cheaper on the blockchain. Hell yeah, like that's awesome. And oh, okay, this blockchain thing is really cool. Let me get involved with Bitcoin too. So I think these are all intrinsically linked, like you said. I think there is, like, it's not security tokens that are gonna, you know, be the thing that kicks it off, but they serve as sort of like the kindling, if you will, of, you know.
So you think it's going to be more regulation coming in because of security tokens, and that thus being applying to Bitcoin, and that sparking the wick?
I mean, regulation, institutional players, really just retail investor attention. You know, if the common rhetoric right now is that crypto is a scam and that, you know, blockchain is just this you know, useless technology, and then we could show not only is it not a scam, but it's utilized in such a way that we cut out you know, Wall Street and banks and these guys that literally take like 15% of your you know, company when you go IPO. Like I said, we're pushing towards more private equity offerings anyways, but like this is the vehicle that will facilitate and make that happen, because it's faster, cheaper, more secure in every respect. And yeah, like if you really want to get out there and like talk about like the SEC mandating security token offerings at some point, like that's probably far out there, but you know, like that's the sort of thinking that we're playing by here is you know, you have a model that intrinsically brings value to a space, just because of the merits that it's built upon. You know, we're taking a lot of what the ICO pioneered, and we're just, you know, making sure that it, you know, plays with the current system, because it's not our intention to usurp it, at least not right now. But like you said, it's sort of the, you know, the love child of like crypto and the traditional finance world, and like that is so powerful because it takes the best aspects of both. The, you know, the decentralization inherent in blockchain and like the compliance built into the traditional finance model. You know, like that, you can't tell me that there's power in that, and like, you know, there's not just disruption power. What I found was really interesting when we both attended the security token conference, is that it wasn't disruption or revolution that people were talking about. They were saying evolution. Yeah. And that's precisely what it is it's not this like big crazy new thing. It's building upon a model that already exists and just, you know, basically taking an analog paper process and turning it into a digital one. Like that has been the basis for like every major industrial growth in the past 100 years. So, you know, like being able to make something electronic that was traditionally done manually and on paper. So
yeah, absolutely. This is the one place I'd maybe disagree. I guess we just have different opinions on this, is that I personally see it playing out, the bubble playing out in the security token sector, because I think that institutions get it. Like, I think one day Bitcoin's super theoretical still. I think there's a lot of promise to it, but there's still so much more that needs to be proven. I think, as you say, because Bitcoin, actually that's a good use of words. Bitcoin is sort of a revolution, and blockchain for financial markets is an evolution. And I think the institutional players are happier to jump on board with an evolution before they are with a revolution. So it's a bridge. I personally see it playing out in the different sector, but this is why I love these conversations. I respect everything you do. I can tell you're a very smart guy, and it's interesting that we have different opinions.
I mean, like, don't get me wrong. I think you're right. There is absolutely going to be a bubble in the STO market, and that's unfortunate, but it's also necessary, and like, it's indicative of. It's
a good thing, actually. At the end of the day, it's how you bring capital in, so you build something that lasts for generations. People think bubbles are bad, but bubbles at the end of the day help an industry.
Yeah.
All of the money that came into crypto, I mean, if ICOs had been a bit better at cashing it out, then there would be a lot more left here. But if a lot of that money is, say, if it's collected in fiat currency instead of ether, so there's no concern with it being cashed out, you then have an industry which is heavily suppressed when the bubble pops, but with a lot of money to actually build. If you don't have a bubble, where'd you get the money from in the first place? And money's not everything, but when you're trying to build an entirely new industry, money is definitely something.
It's all about the assets under control and sort of how you can represent that. I mean, you want to talk about like the bridge for institutions to get into blockchain. I think you're absolutely right. Like, STOs are one. I think stablecoins are another one. But let's look at what you can do once you have the ability to tokenize assets. For example, let's say we tokenize a house, and now we can represent that in a digital wrapper, the ownership of that house, the value of it on blockchain as a token. And then we can use that as collateral for something like DAI as a stablecoin. Like, that's awesome. Like that gets you that sort of multi-collateral, setup that is necessary for something like a stablecoin to exist and exist with purpose and perpetuity. So that's an unbelievably good point. It's the interoperability of all of these things, because if you tokenize equity, or you tokenize real estate, or you tokenize anything with value, it's represented in a token. So I can trade. If theoretically I could trade equity for a house directly, like, I don't know how that market would possibly exist, but the fundamental of trading a token for a token actually exists, and you can have. This is why I'm quite interested by these security token exchanges, because I think their first initial stage, they're going to more look at trading shares in companies, tokenizing equity. But in the long term, we could have real estate on those security token exchanges, which you don't have on regular stock market exchanges, because you tokenize it. Now it's completely interoperable. That's huge. That's mind blowing. I mean, if you really want to like get sort of out there and a little bit, so for example, in the US, like, the SEC has a mandate and a sort of a charter, and they have a microscope on exchanges, and that is their point of entry. That is where they crack down and, stop anything from happening. Do not list that ICO on your exchange, or we will shut you down, sort of thing. Or you like, that is what they use as enforcement. And but what happens once we start to really utilize some of the decentralized exchange protocols that we're seeing being advanced right now under the context of private equity and tokenization? And really, like, you and I, if we are compliant we could trade a share as almost like a atomic swap or so, and there's no exchange intermediary there. There's no middleman. There's nothing. The SEC, regulators in general, do not have a lot of legal precedents to stand in between you and I transacting value. So if you really want to go there, like, yeah, this is the start. Like I said earlier, like these are the cracks that are starting to show that will only be exacerbated as this technology continues to improve and be disseminated. And just like, oh yeah, like they I don't think that
decentralized exchanges are actually a fascinating one. Let's discuss a bit of that. I think it's an interesting topic, and I have quite a controversial opinion on it, which is always fun to discuss.
I'm all ears.
Because in the blockchain industry, the motto has always been hold your own private keys or you don't hold your own crypto. Sure. And that is 100% correct. Because at the end of the day, with Bitcoin or Ethereum or any utility token out there, there is no legal framework surrounding it. So if I give my money to an exchange and they crash or they lose my money or the owner dies and he takes the private keys with him, then I can't go to my government or some sort of legal enforcement and justify that I need my money back. With security tokens, I actually see it transitioning more towards the existing system of custodians for the reason that won't necessarily exist. Like, I don't need to hold my own private keys because a custodian can hold them for me. And if they try to do anything that's wrongful in any way, I can go to my government and be like, they stole my money. And then legally, they have to give it back to me. That has never existed with utility tokens. And speaking to regular people on the street, I don't think people want to hold their own private keys. We get so caught up in speaking to other people in crypto, and we're used to creating a wallet, and we're used to having a ledger and writing down 20 words which represent our private keys if it goes bad. But you explain that to someone on the street, and they're like, oh man, can't I just give it to a bank? Even though they don't like banks, they prefer banks over that system. So I actually think we're going to move more towards a custodian type system. And with security tokens, I don't know. I think decentralized exchanges will still have a part, but you'll have to go through KYC and AML. And I don't think any government worldwide will allow a system where we can circumvent the regulations. I think if you want to build a decentralized exchange, then you're going to have to not only follow the regulations, but also when you look at the core fundamental purpose for decentralized exchange, the main selling point being hold your own private keys so you don't have to worry about the exchange crashing. If we take that away, I then start to look at it and think, are decentralized exchanges more just suited to utility tokens than security tokens? How much of a role are they necessarily going to have?
Yeah, I think that's sort of one of the misconceptions about security tokens. And unfortunately,
what's that?
Well, I think that centralization within security token platforms is sort of unavoidable. And that being said, I think that doesn't erode the value proposition of these systems. And like at the end of the day, yeah, I think you're right, especially under the context of equity. Custodial solutions will still have value, at least in the near term. I think there's every reason to suspect that will be utilized. And I don't know.
I'll ask you anyway. What would you kind of like to, I always ask, what would you like to leave the audience with? Could be crypto related, life, blockchain, security tokens, could be any message. Do you have like a closing message you'd like to finish this with?
Yeah. I mean, what we've kind of stressed a lot throughout this conversation is the need to be open-minded and to be basically lenient in your judgment as it relates to an emerging technology and an emerging industry. So, just because someone says something, don't take it at face value, especially as it relates to something as nascent as security tokens. And obviously the opposite is true, or like basically just do your own due diligence and make sure that you're doing the research and that you look into this sort of stuff, because there is a lot to understand and learn, but at the same time I think it's accessible, and there's resources out there, and certainly I'm not going to stop talking about security tokens, and you're probably not going to stop talking about them either.
Nope.
So like that's what it requires to kickstart something as important and evolutionary as something like security tokens, is that we have this discourse, that we do the research, that we don't just sit there and peddle like very shallow and surface level discussions or statements, that we take the time to really think about this and understand it, because it's really complex and there's a lot of different things. And blockchain is in such a transition period right now. The first 10 years were really interesting, but I think the next 10 years are going to be even more so. And so, like I said, it's going to be utilizing not just the space by itself, but like the intersection of so many other spaces and technologies and industries. And yeah, I think that's really exciting stuff. So
that's a powerful message. And I'd sort of like to echo that with just a message of always be curious. You've got like everyone that got into this space was open to the idea that this crazy piece of technology could change the world. Don't pigeonhole yourselves into tribalism with certain coins, or the idea that because you thought something was true, that it absolutely must be. Be open to the idea that something crazy new can come along, and we're all wrong about things at certain times. Be open to the idea of just looking at everything from a holistic perspective, taking your own, I guess, can't think of the word, predispositions away from yourself, and just understand that if you look into what we've been talking about today, I personally believe, and I'm sure Mav does as well, this is incredibly powerful. The people who already take that message on board are going to look back in a few years and be in a better situation than those who didn't. So don't get stuck in a certain way of thinking. Always be curious and be open to new things. Right, let's wrap it up with that.
All right. Yeah.
Mav, it was an absolute pleasure. I hope we get to chat again sometime soon.
I do as well. Thank you so much for your time, and thanks for an awesome discussion.
You too. I really enjoyed it.
All right. I'm going to go make some breakfast. But take care.